Welcome students. In this video we are making an attempt to learn computation of taxable income and tax liability with respect to individual assessees. And our discussions mainly will be considered for syllabus purpose and for the university exam related content. This is the format for calculating total income and tax liability of an individual assessee. We are mainly concerned with assessment of an individual. As we have already understood, there are 5 heads of incomes. 2 heads we have learned in the 5th semester BCom level, and the remaining 3 heads we have learned during this semester. So we have to take income from salary, income from house property, taxable income from business and profession, taxable income from capital gains. But while taking capital gains, we have to exclude long-term capital gains and short-term capital gains where STT is attracted. So except these two, STCG with STT and LTCG. Except these two, any other capital gains we have to add. And then finally, taxable income from other sources. Even here, we have to exclude casual income. Casual income is nothing but winning from lotteries, card games, TV show games, horse races, betting, gambling. All this comes under casual income. So except these, we have to add all 5 heads of incomes, and which is called as gross total income. From this gross total income, we have to give deductions under section 80C to 80U. Then we will arrive at the total taxable income. But this will be excluding the 3 which we have excluded in previously. Now we have to add it back. Casual income, long-term capital gain, short-term capital gain with STT, and any other deemed incomes if it is there, all that we have to add it back to the income to arrive at the total taxable income, or which is also called as net income. But we have to remember these, why the 3 points or 3 items is excluded in gross total income. The reason is all these 3 items attracts a flat rate of tax. There is 2 types of taxes. One is flat rate and another one is slab rate. Flat rate means whatever the income you get under the flat rate system, it will be charged at a flat rate of 10%, 20% or 30%, whatever is fixed. Whereas under slab rate, which applies to individual income, individual assessees, like up to 2.5 lakhs there is no tax, 2.5 lakhs to 5 lakhs there is 5%, 5 to 10 lakhs 20%, 10 lakhs and above 30%. This is called as slab rate. That is the difference between the slab rate and the flat rate. So after applying this format, we will arrive at the total taxable income. And then let's look at the format for calculating tax liability. As I explained you earlier, these 3 items, casual income, LTCG, STCG with STT, will attract a flat rate. That's why casual income is at 30%, it is taxable. LTCG is taxable at 20% and STCG with STT is taxable at 15%. There is one more, deemed incomes. Like if there are any unexplained expenditures or cash credit or investments or money where you are not able to explain the source, such items is also taxable at a flat rate of 30%. And after all these, finally whatever is the left out income, and that income is taxable under slab rates. That's why it is given in the bracket. You can identify the difference between the slab rate and the flat rate. Now the total of all these 5 put together is your total tax. If your total income is is less than 3,550,000 per annum, then you are eligible to claim a rebate under Section 87A for rupees 2,500 or 100% of your total tax liability, whichever is less. After subtracting the rebate, if you are eligible, whatever the total tax we get, to that total tax we have to add surcharge if it is applicable. Surcharge of 10% of income tax where the total income exceeds 50 lakhs per annum. If the income exceeds 1 crore, then the surcharge will be charged at 15%, 15%. So that we have to add. Health and education cess at 3% we have to add. So now we get the total tax. From this total tax, if you have paid any advance taxes or tax deducted at source, that has to be subtracted. If you are supposed to pay any interest or penalty for your delayed payment or any other legal proceedings against the assessee, such interest and penalty has to be added. And finally, we will arrive at the tax payable. Sometimes this tax payable or tax liability, what we normally call, it can be even a negative value, which means that refund that you have to receive from the tax authority. It is not always the tax is payable by the assessee. Even whenever you have paid excess tax in the form of tax deducted at source. So for example, you have banking investments or you have interest from bank where the bank would have already deducted the TDS at the source itself. So all such TDS, if you are not coming in the tax bracket, you can claim that refund back from the tax authority. So that is the reason why everybody, even if I'm not supposed to pay tax, but still it is good to apply or file income tax returns. That is the best practice. So it can be tax payable by the assessee to the tax authority, or if it is a negative value, which means that this is the tax refund which has to be paid by the tax authority to the individuals. This is how the format will be followed. Please understand it properly. I was mentioning about the flat rate of tax and slab rate of tax. Now you look at the slab rate of tax for different individuals based on their age. It is based on the different types of persons. Individuals, HUF, association of persons or body of individuals, and artificial persons. These are the slab rates which will be applicable. If your net income is ranging between up to 2.5 lakhs, there is no tax. 2.5 lakhs to 5 lakhs, 5%. 5 to 10 lakhs, 20%. 10 lakhs and above, it is 30%. Same way, for the senior citizens, those who are above the age of 60 years but less than 80 years of age, for them up to 3 lakhs there is no tax. 3 lakh to 5 lakh means the 2 lakhs difference amount, 5% they have to pay. How we calculate normally? 3 to 5 lakhs means 2 lakhs. 5% of 2 lakhs we have to take. Then 5 lakhs to 10 lakhs, 20%, 10 and above it is 30%. There is a third category of citizens who are called as super senior citizens whose age is above 80 years. So for them, up to 5 lakhs there is no tax. 5 to 10 lakhs, 20%, 10 and above it is 30%. I was mentioning about 87A rebate. Any resident individual whose income is up to 3,50,000 per annum can avail this rebate. It is a deduction from the income tax before calculating the education cess, higher education cess. and the amount of rebate is 100% of the income tax that we have to pay, or rupees 2,500, whichever is less. And surcharge is nothing but it is also called as tax on tax. 10% of your income tax if your total income exceeds 50 lakhs. 15% of your total tax if your income exceeds 1 crore. And health and education cess is at 4%. These are the basic concepts, information which you people should be aware before calculating the problems. Here is a small illustration to understand how to calculate tax liability of an individual assessee. There are 3 assessees given: Mr. Amar Gupta, whose income is 3,40,000, Mrs. Jyoti Gupta, 5,20,000, and Mr. Animesh Dash, 6 lakhs. Okay, senior citizen, it is very clearly given. So we have to apply the slab rates and find out what are their tax liability in each of the 3 assessees case. The first one, Mr. Amar Gupta, his total income is 3,40,000. So he comes under the first sector. So up to 2,50,000 there is no tax, nil. 2,50,000 to 5 lakhs. But his total income is only 3,40,000. So the remaining difference, 3,40,000 minus 2,50,000, it comes to 90,000. So on this 90,000, 5% tax we have to charge. That comes to 4,500. So the total tax becomes 4,500. Now his income is less than 3,50,000 per annum. That means he is eligible for rebate under section 87A. So 2,500 rupees or 100% of total tax. Total tax is 4,500 or 2,500 rebate, whichever is less. So 2,500 obviously is less, so that will be subtracted. So now your total tax liability becomes your 2,000. After giving the rebate, now you have to add 4% of education cess. 4% of what? 4% of rupees 2,000. That comes to 80 rupees. So now your total tax payable is 2,080 rupees. I hope you people have understood in the first case how we have calculated the tax liability. Look at the second case, Mrs. Jyoti Gupta. Her income is 5,20,000. So up to 2,50,000 there is no tax. The second slab comes to 2,50,000 to 5 lakhs. That means the difference of 2,50,000. On this 2,50,000, 5% is the tax rate. So 5% of 2,50,000, 12,500. And the remaining amount. So already you have subtracted till 5 lakhs from your total income. Now how much is left? 5,20,000 is your total income minus 5 lakhs. Up to 5 lakhs you have already charged 5%. So the remaining difference amount is 20,000. On this 20,000 you have to charge 20%. That comes to 4,000. So your total tax becomes 16,500. Now she is not eligible for rebate under section 87A because her income is more than 3,50,000 per annum. So straight away we are not giving her any rebate. Straight away we are going to charge education cess 4%. 4% on 16,500, it comes to 660. Now when we add these two, the total becomes 17,160 rupees is your tax payability. Look at the third situation. Senior citizen, up to 5 lakh rupees, the tax will be charged at a minimum rate. His income is 6 lakhs. Up to 3 lakh rupees, there is no tax. So 3 lakh to 5 lakhs, there is a difference of 2 lakh rupees. On this 2 lakhs, 5% charge means 10,000. Now out of his total income 6 lakhs, up to 5 lakhs you have already charged. Now the remaining, how much is left? Only 1 lakh is left. So on that 1 lakh, 20% we have to charge. So 20% comes to 20,000. So total it becomes 30,000. And his income is more than 3.5 lakhs per annum. So the senior citizen is also not eligible to claim rebate. So straight away we charge education cess at 4%. 4% of 30,000 comes to 1,200. So your total tax payability is 31,200. So depending on your total income and your age, you are going to apply the slab rates and find out what is the total tax payable by the assessee, or it can be a refund also if it is a negative value. Hope you people have understood the tax liability concept. Let me explain you few illustrations basically covering the section deductions. This question is mainly for ATC. The entire question mainly it covers life insurance premium on his own life, wife's life, married daughter and dependent sister. Repayment of loan from LIC for purchase of commercial house property, contribution towards URPF, tuition fees of daughter, life insurance premium on the life of his major son which is due on 1/12/2018 or 3,000 but paid on 1/5/19. So how this tax treatment we will understand. Accrued interest on National Savings Certificate 5,000, contribution to PPF and Sukanya Samruddhi scheme. So let us understand how to solve this. Now under section 80C, the life insurance premium on his own life, wife's lives or dependent daughter or son can be considered, but not the dependent siblings. Brothers, sisters will not be considered. So life insurance premium on own life 2,700. Life insurance premium on wife's life 8,000 is taxable. That means he can claim for deductions. Life insurance premium on married daughter, whether the daughter is dependent on you, independent, or married or unmarried, but still you can claim as deduction. Life insurance premium on dependent sister's life cannot be claimed as deduction. Repayment of loan taken from LIC for purchase of commercial house property cannot be claimed as deduction under 80C. If it is any housing society like HDFC or any other housing schemes, interest is allowed as deduction but not the repayment of the principal amount. Contribution to URPF is exempted from tax. Tuition fees of 2 children can be claimed. Here the tuition fees of daughter is given 22,000, so entire amount is exempted. Means you can claim deduction. LIC insurance premium on his major son which was due in December 2018, but 3,000 was paid in May 2019. So May 2019 will fall in 2019-20 previous year. So it will not be applicable for 18-19 previous year. So we are not showing that as deduction. Accrued interest on National Savings Certificate is claimed as exemption. So you can claim for deduction. Contribution to PPF, you need not have to claim. It is already exempted from tax. A deposit in Sukanya Samruddhi Yojana, you can claim this as deduction. So after adding all these items, the total it comes to 49,700. So but the actual amount which is allowed is 49,700 is your actual investment, or rupees 1,50,000, whichever is less. So the less amount is 49,700. Your eligible to claim 49,700 as deduction under Section 80C from your gross total income.